Welcome back, listener. Ready to dive into some tech earnings?
Always.
Awesome. Today, we're looking at Amazon and Intel.
Oh, interesting.
Yeah, you've given us their Q3 2024 reports.
Right.
Plus this super helpful checklist.
Yeah, should be fun to see what shakes out.
Totally. I'm excited to unpack these reports and figure out what they tell us
Yeah.
about where these companies are going.
You know, it's wild. We've got these two companies
Yeah.
that are at totally different points.
Yeah.
One's like riding high and the other's,
Yeah.
facing some serious challenges.
Yeah, definitely. So let's jump right into it.
Let's do it.
Let's start with Amazon because, wow, they are killing it.
Uh-huh.
Net sales up 11% to almost $159 billion.
Wow.
Operating income's at $17.4 billion.
Mm-hmm.
And get this, their free cash flow is a massive $47.7 billion.
Like, that's not just free cash flow. That's a geyser.
Yeah.
But it's not accidental, right?
Yeah.
Amazon's making some smart moves.
Yeah.
Prime is huge for them, and they just keep adding to it.
Yeah.
Like, they had those Prime Big Deal Days, which were a big success.
Yeah.
They're expanding that same-day pharmacy delivery service,
Mm-hmm.
and they're even launching a fuel savings program for Prime members.
Yeah. They're making it so tempting to just join Prime for everything.
Oh, for sure.
And then, of course, there's the AI elephant in the room.
Right.
Amazon is going all in.
Yeah.
They've got that new AI shopping assistant, Rufus.
Yeah.
AI-powered guides for shoppers. And Project Amelia, which is supposed to help sellers really optimize their businesses.
It's clear they're serious about AI.
Yeah.
They're not just playing around. They're making it central to what they do.
Yeah.
It's fascinating how they're doing both, right?
Yeah.
Strengthening Prime, embracing AI.
Yeah.
It sets them up to win now and later.
Yeah. I totally see
That free cash flow lets them invest like crazy.
Ah.
And the AI integration could make them unstoppable in the future.
Yeah. Okay, so now let's switch gears to Intel.
Okay.
It's a completely different story. Uphill battle all the way.
Mm-hmm.
Revenue down 6% to $13.3 billion.
Okay.
And hold on to your hats because they reported a GAAP net loss of $16.6 billion.
Yeah, that loss is a bit of a gut punch.
Yeah.
But we got to look deeper, right?
Yeah.
A big part of that comes from what they call impairment charges.
Okay.
Basically saying some stuff they have isn't worth what they thought.
Like they overestimated the value.
Exactly. And it hit their manufacturing assets the hardest.
Oh, wow. So it's not like they're just out $16 billion in cash.
Right.
It's more like recalibrating.
Yeah, but they're not just taking it lying down either.
Yeah, they're not.
They're slashing costs aiming to save $10 billion by 2025.
Yeah.
Plus, their next-gen chip-making process, Intel 18A,
Right.
it's on track and making waves.
Yeah.
And then they're spinning off their foundry business.
You mean the part that makes chips for other companies?
Exactly.
Yeah.
It's bold, right?
Yeah.
Their CEO, Pat Gelsinger, he's shaking things up big time,
Yeah.
trying to turn this huge ship in a whole new direction.
Yeah.
On the one hand, you have cost cutting, becoming super efficient,
Mm-hmm.
and then this huge bet on the foundry business and Intel 18A.
Yeah.
So it's efficiency plus innovation, a two-pronged approach.
Okay, so we've got two very different narratives unfolding here.
For sure.
Amazon, the cash king, using AI to fuel their growth.
Yep.
And Intel, the veteran player trying to reinvent themselves.
Mm.
Now let's see how they measure up against this checklist you gave us.
Yeah, the checklist will help us go beyond those big headlines
Okay.
and really dive into their financial health.
Here's it.
First up, free cash flow.
Mm-hmm.
We've already talked about Amazon's stellar situation.
Uh-huh.
But for Intel, it's, a different story this time around.
So free cash flow, why is it so crucial?
It's all about options.
Okay.
Strong free cash flow gives you flexibility.
Okay.
You can reinvest, buy back stock, pay down debt, weather storms.
Yeah.
It's like having a financial cushion that gives you security
Yeah.
and the ability to make strategic moves.
Makes sense.
Next on the checklist is return on equity.
Okay.
Now, with Amazon's healthy net income, theirs is probably quite good,
Yeah.
while Intel's, with that loss, will likely be negative.
So what exactly is return on equity telling us?
It measures how effectively a company uses shareholder money
Okay.
to make a profit.
Okay.
A high ROE generally means management is doing a good job
Uh-huh.
using those investments to grow the business and add value.
Okay. That makes sense.
Now let's talk debt-to-equity ratio.
Right.
Amazon likes to keep their debt low,
Uh-huh.
but Intel might be taking on more debt.
Yeah, to finance all these changes.
Exactly.
Mhm.
What are the implications of each approach?
Yeah, that's what I'm wondering.
Well, it's a trade-off.
Okay.
Amazon's low debt means stability,
Yeah.
less financial risk,
Right.
but they might miss chances to use debt to grow faster.
Interesting.
Intel's increasing debt could fuel their turnaround.
Yeah.
But it also adds risk if their bets don't pan out.
So it's a tightrope walk.
It is. It's all about balancing risk and reward.
Gotcha. So what's next on the checklist?
Profit margins. It shows how much profit they make per dollar of sales.
Okay.
Amazon's retail is known for thin margins.
Right.
But their cloud computing AWS, that's a profit machine.
Oh, yeah. AWS is huge for them.
It balances things out for them.
So how are Intel's margins looking?
They're feeling the squeeze.
Uh-oh.
The PC market slowdown is hitting their core business.
Right.
And the data center market is getting more competitive.
Yeah. Not a great combo.
It's a tough spot to be in right now.
Yeah. Okay, next up we've got the PE ratio. This one's kind of tricky without knowing their current stock prices.
Yeah.
But basically it tells us how much investors are willing to pay for every dollar of a company's earnings.
Think of it like a confidence meter.
Okay.
High PE usually means optimism about future growth,
Okay.
while a low PE could signal doubts about the future.
Gotcha. And last but not least, we have dividends.
Right.
Now, Apple, they pay them. Just announced a new one, in fact. But Intel and Amazon, they don't.
No, they don't. Why is that?
Yeah. What's the deal there?
Well, dividends are like sharing the profits with shareholders.
Okay.
Companies that pay them are usually mature and raking steady profits they can share.
Right.
Now, Intel, they're laser focused on this transformation.
Yeah.
They need to reinvest everything to make it happen.
Okay.
And Amazon, historically, they've always prioritized growth, pouring resources back into the business.
So no dividends isn't necessarily bad.
Exactly.
That just tells us about their priorities and where they are in their journey.
Exactly. It's something investors consider, for sure.
Especially those who are looking for income from their investments.
For sure. This checklist gives us a much clearer view of their financial health and where they're headed.
We've crunched the numbers, worked through the checklist.
We have.
But now it's time to go deeper.
Yes.
Beyond the balance sheets and really explore the story each report is telling about the future of these tech titans. So stay tuned, listener.
Oh, stay tuned.
Things are about to get really interesting.
Absolutely. Okay, so let's step back for a sec.
Okay.
Big picture time.
Yeah.
What story are these reports telling us about the future?
Well, with Anson, it feels like they're shifting gears a little.
How so?
Like the growth at all costs era. It may be winding down.
Interesting.
They're still growing, don't get me wrong.
Right.
But now the focus seems to be more on profitability and really maximizing their scale.
And AI is a huge part of that.
Right, so absolutely.
They're not just dipping their toes in, they're diving head first.
Yeah, it's everywhere in the report.
Right.
Shopping assistance tools for sellers. I bet they're using AI to optimize their warehouses.
Oh, I'm sure they are.
Like their entire delivery network.
It's a clear message to everyone.
Totally.
Investors, competitors, Amazon's betting big on AI.
Yeah.
It's the key to staying on top.
In e-commerce, cloud computing?
Yep. And probably disrupting industries we haven't even thought of yet.
Yeah. It's like they're saying we were big before, but now we're going to be big and smart.
Exactly. Now, Intel, on the other hand, their story is one of transformation.
Yeah. And it's not a smooth ride.
No, it's not.
Yeah.
But their CEO, Pat Gelsinger,
right.
He's making some really bold moves.
He's really shaking things up.
Oh, yeah, for sure.
Yeah.
Like forcing them to adapt to this rapidly changing world.
Like he's trying to turn this massive ship around.
Yeah, and he's placing a big bet
on
the foundry business and Intel 18A.
Right.
They're basically saying, we're not just making our own chips anymore. We're going to be the best in the world at making chips for everyone.
That's ambitious.
It is. It's risky, too.
How so?
The foundry market is dominated by giants.
Right, like TSMC.
Exactly. They have a massive head start.
Yeah, so it's a real David versus Goliath situation.
It is. But if Intel can pull it off, if Intel 18A lives up to the hype, they could become a major player in this crucial market.
Yeah, I'm starting to see why you called this a tale of two tech giants.
Right.
It's like two different paths through the same unpredictable terrain.
And it poses an interesting question.
Okay.
Imagine you're an investor. You've got money to put to work.
Yeah.
Which story resonates more with you?
Oh, that's a tough one.
Right.
Amazon with their track record, tons of cash, that aggressive AI push, or Intel with their history of innovation, this painful but maybe game-changing restructuring, and that gamble on becoming a foundry powerhouse.
It's a classic dilemma.
It is.
The reliable all-star versus the underdog.
Yeah, with a potential comeback story.
Right. No easy answer.
It really shows you how important it is to look beyond just the numbers.
Absolutely.
And understand the story behind them.
That strategy, the vision.
Yeah, because the numbers tell us what happened.
Right.
But the narrative helps us understand why.
Exactly.
Yeah.
And more importantly, what might happen next.
So, listener, what jumps out at you from these two contrasting stories?
We've seen Amazon seemingly weathering the storm better than Intel.
Yeah.
But what about the long game?
Yeah.
What factors would you consider when deciding where to invest?
Yeah, it's a fascinating question.
We've only scratched the surface here.
Yeah.
But some key insights have definitely emerged.
Definitely. Like, one thing's for sure.
Let's say.
Both Amazon and Intel are betting big on AI.
They are.
Yeah.
But what if this is more than just a hot new technology?
Okay.
What if it's a fundamental shift in how these companies and the whole tech industry operate?
Wow.
And what does that mean for you, the listener?
Yeah.
Not just as an investor, but as a consumer, a worker, as someone living in a world increasingly shaped by technology.
Yeah.
Yeah, those are some big questions for sure.
Yeah, and we've only just begun to explore them.
Right. But hopefully this deep dive has given you some food for thought.
Yeah, maybe even inspired you to dig a little deeper on your own. Well, listener, it looks like we've reached the end of our deep dive.
We have.
Into Amazon and Intel's Q3 2024 earnings reports.
Two very different companies.
Yeah, with two very different stories.
Yeah, we saw how Amazon seems to be in a much stronger position right now.
Yeah, they've got that robust free cash flow, that ever-expanding Prime ecosystem.
Right.
And they're going full speed ahead with AI integration.
It all points to a company.
Yeah.
That's feeling pretty good about the future.
Definitely. Now Intel.
Yeah.
They're in the middle of a major overhaul.
Yeah. Big changes happening over there.
Betting big on their foundry business and the success of Intel 18A.
Right. Trying to reclaim their place in the semiconductor world.
It's a risky move for sure.
It is.
But if they can pull it off,
yeah,
it could be a huge win for them.
Absolutely.
So as we wrap up,
yeah,
we want to leave you with one final thought.
Okay.
Something to ponder.
Yeah.
As you navigate the ever-changing world of tech.
I like it.
We've talked a lot about how both Amazon and Intel are going all in on AI.
Yeah, they're both betting big on it.
But what if it's more than just a cool new technology?
Right.
What if it's a fundamental shift
in how our economy works?
Yeah.
How businesses operate.
Imagine a world where AI isn't just a tool.
Right.
But a collaborator.
A partner.
Maybe even competition.
In the workplace.
How would that impact your career?
Right.
Your investment?
Your everyday life even.
It's something to think about.
It is, because the future rarely unfolds the way we expect.
Yeah, it's usually much more surprising.
And disruptive.
And way more interesting.
So keep your eyes open, listener.
Yeah, stay curious.
That's all for this deep dive.
Until next time.